righty. Good morning, everyone. This is Donato Callahan, CEO of Bright Investor, and welcome to another Bright Investor office hours. As always, if you are new to office hours, this is a twice a week, Wednesday evening and Saturday morning, an hour-long session. Just get to get support and whatever you need for real estate investing and using Bright Investor. So if you have a market you want to help analyze, if you have a deal you're looking at, if you want to learn how to use Bright Investor more effectively, have a question, have a suggestion, or have any other things that are on your mind regarding real estate investing or using Bright Investor, I'm happy to help. And this is designed to be an open forum type of hour. So feel free to unmute yourself. We'll have a conversation. We'll have some fun. And we'll go ahead and make sure you get as much value as possible. So without further ado, if anyone has any immediate questions, comments, concerns, or things they want to get out in the open as we can kick off today's meeting, please go ahead. And I'll be here for the entire time.
Hey, Donato, this is Cindy.
Hey, Cindy, how you doing?
Good, how are you?
I am good. Fun up. Oh, go ahead.
Sorry, I'm gonna keep my video off today. I'm recovering from the office Christmas party.
Love it. Love it. I appreciate that. Hope you had a good time.
Yeah, it was good. I
Perfect.
had a question about I haven't really played around with tutorials, so you might already have it included, but I'm wondering
Mhm.
how to use the list to import a list and have that work on your properties. I have a listability list with about 150 properties on it, and it's got a whole bunch
Okay.
of different categories or columns, I guess, in Excel. So I know I probably need to narrow it down to the street address. I don't know. I guess I'm asking, can I use a listability Excel sheet and bring it in and have it give me information on each property, or am I thinking that that's a different kind of tool available?
So we can help with the first part of that. And what you're talking about for that entire thing is called something that we call like a list automator. So for the first part of it, what we can do is we can upload a list of properties into Bright Investor. We can display them on the map as individual pins, and then we can filter those properties based on different criteria to be able to get an idea of which ones we actually want to focus on. The second part of being able to upload a list of properties and then have Bright Investor fill in information on the actual properties is that second piece that's in development called a list automator to do exactly what you're talking about, where you can upload a list and then we'll go out and find property data for you. And then you can, manipulate that inside that BI. So we can help right now, we can help with the first part, and then eventually we'll be able to help with the second part too.
Okay, so when I upload the list, do I
Mhm.
need to filter? Do I need to take out all the information except the property address?
Yeah, I will share my screen and I'll show you how it works.
Okay, great, thanks.
You got it. Alrighty. Okay. So when we're inside of BrightInvestor and we have our app open and we have our sidebar, there's this button right here that says upload list. So we click upload list, you need to be able to upload a CSV file. So that's different than an Excel file. So instead of .xlsx, it's .csv. So in order to use this, all I have to do is click upload CSV. Now I need to go find the one that I was doing. I want to say it was this one. So once I click my CSV file, this is going to show up. And so what this is doing is it's reading every single column header inside of that file. So one of the columns is called address, and it's a bunch of addresses. One is how many stories is the property. One is neighborhood, square footage, all of these things. So Bright Investor found all of these headers in your file. Then I can simply map it and say, hey, address means address, or square footage means square feet, right? And things of that nature. Once I map these things, I can also click this kind of star icon. So the star icon means is that once I have these property pins displayed on the map and I click on one of them, anything that has a star icon will show up on that little pop-up when I click on the pin. So maybe whenever you click on the pin, you want to be able to see the square footage of the address. So for this to work, at a minimum, you have to map the address. That's it. Once I've done that and I click import, it's going to start finding every property and showing them up across the nation with these pins. So for example, I had a list of properties in St. Louis. These are all properties that the Land Revitalization Authority owns in the city, basically city-owned properties that are all kind of condemned or run down. And I wanted to run a report to see where they were. And so now each one of these pins is one of those properties. So if I want, I can click on this one and say this is 2927 Herbert Street, square footage. Now, the more data that you map in that mapping section, the more valuable this becomes because I can do things what we call quick focus. So like this quick focus, I can say, you know what? Based on the square footage, this example, I want you to change the pins on a scale basis. So the properties with the biggest square feet become the biggest pins. The properties with the smallest square feet become the smallest pins. Or you might say, you know what? Instead, I want you to filter on a red to green scale. So, or you might want to say, I want you to filter based on transparency. So, sometimes for me, I think scale is the best for this one. So if you're saying, you know what, I only want to look at the properties of the biggest square footage, no problem. I can just click on them and select those pins. And when I do that, they turn blue like this. Now you can also use this drawing tool to draw a shape around the pins you want to select. And once you have selected these pins, you're like, you know what? Hey, these are the properties that I really want to focus on because they're in the right area or they're in the right, what have you. Then I can just go ahead and click export selected, and it will give me a new CSV file with just those properties on it. Or I can say, hey, I really don't want these properties. I can delete the ones I've selected. And so in that way, we can take a list of this is about 30 properties, and I can nail it down to maybe 4 or 5 that I really want, and then go ahead and start moving forward. The evolution of this section of the tool will be once you upload a list, it will show up in your list and report section, and it will auto fill out all the different property details. But that's where it currently sits right now. Any questions about that?
No, I don't think so. I need to play around with it, not having those basics. So that's great. Thank you.
You got it. Mark Oshiro, how you doing, my man? Good to
What's
see
up?
you.
What's up, big guy? How's everything going?
Going well. Good to see you.
Yeah, man. Just wanted to pop in. I saw it in my email, so I said I'll check it out.
Yeah, absolutely. As if you're not familiar with Mark, he's a financial firefighter. He has a YouTube channel, does live streams all about real estate investing. Great guy. You guys should give him a follow on his channels. He's been a BrightInvestor supporter since some of the earliest days back in 2023. Wow, just a long time ago. 2022, actually.
Yeah,
Long time.
Chester guys have been talking so much about all the improvements. Chester, Jason. So yeah, I came in to check it out.
Yeah, absolutely. All right. Anyone else I can go ahead and answer some questions for? Vanessa or Tim, I'm going to call you out. Any questions for me at this time I can go ahead and take a look at for you?
Yeah, so hi. I just wanted
Hi.
to see how do you analyze a zip code? Can I give you the zip code?
Yeah.
Okay.
What zip code are you looking at?
So it is 3812,
38.
and I have the
So
recap.
38123, was that right?
Sorry, it's 38128. It's
Got it.
Yep.
Memphis. There we
Yep.
go. Okay. Let's make
So
it
I'm
happen.
looking at the conducting your market recap. Uh,
Yeah,
so I
perfect.
just go down the list and well, I
Hmm.
started with population. If you want to, and I did population from 2014 because I think based on your guide here, it says
Hmm.
in the past 10 years, right?
Hmm.
So I wanted to get your take on this and see how you analyze
Hmm.
this.
Okay.
It doesn't look good. I mean, you look at that, it's,
Yeah,
two
yeah.
years.
So here's so my one of my concepts with population growth is when you have a declining population but increasing income, that's generally a sign of gentrification. Now, I'm also a very big proponent of growing population over time to increase demand. So if we're having a decreasing population, I'm not of right off the bat a fan, but I'm not ready to kill this area simply because of one red flag, right? We want to stack these things up and basically make our pros and cons list. So I'm not a huge fan of the population in this area. Next thing I'm going to check out is the appreciation. I want to see one, does this area have homes that are in our price range, of course, and two, is this an area where we're seeing consistent gains? Okay, so this, oh wow, you cannot give me a better zip code to do a case study on. This is great. Okay, this is awesome. First thing first, what we have here, right, is a beautiful example of why we look at both pre, during, and post COVID for growth. So
Mhm.
when we look at this zip code, right, before COVID, home prices in this area were averaging between $68,000 and $88,000. So definitely some growth going up. But then COVID hit and we had meteoric growth. So comparatively, the entire time before COVID, this place was barely growing. Then we had COVID and we saw home prices shoot from $85,000 to $170,000 very, very quickly until we had our pullback. And then since then, meaning since interest rates have been higher and competition has been larger, we have seen prices continue to climb. So this is an example of a market that was relatively, I'll use for lack of a better term, kind of dead as far as rapid growth pre-COVID. And then once we saw this inflationary environment and low interest rates made moving and buying properties even easier, this area got a jolt of electricity in the arm. And even since interest rates have been higher, we've continued to see month over month price increases, even as late as like October, like a month and a half ago. Consistent gains. So one, I really like that this area has continued to gain home price appreciation since home interest rates have been higher. Also, the fact that the median home price in this area is under $200,000 is probably a major driver of the fact that this area is growing as quickly because it's much more affordable than other areas. So I love the home price appreciation, not loving the population. Let's go to our next piece. If we're getting a property that's going to be under 200 grand, the likelihood of us buying for, getting something that makes the 1% rule is a lot higher. So the next thing I'm looking at is our rent growth. And since 2021, almost over a 3-year period, our rents are up 32%, from about $700 for a 2-bedroom apartment to around 925 right about now. So definitely getting up in the right direction I like to see. I love that fast rent growth. And the next thing I want to look at is seeing 3-bedroom, 2 baths as well. 3-bedroom, 2 baths have been growing at a much more conservative rate. So in this area, 2-bedroom, 1 bath properties are seeing the fastest rent growth in this area. And so if we want to be buying a type of asset that's seeing the most demand and is likely going to continue to see growing levels of demand over time, the 2-1s are probably the place that we want to see. But the three twos have definitely seen some solid rent growth as well in the last couple of years. So the rent growth is good, the appreciation is good, and the home price is good because it's under $200,000 when the national median is over 400 right now. So you're basically getting a 50% discount to the rest of the nation. The next piece I'll talk about with gentrification is I need to see the income going up. So we do this, I expect to see income going up at least 20%. Okay. So over the last 5 years or a 5-year period, I expect income to have gone up over 15%. Over 10 years, it better be more. So when I see that the income's only up about 18% over the past almost 8, 9 years, it's not growing as fast as I would like. We don't see a rapid reshifting of who's living here, meaning that we don't necessarily have higher income folks moving in, driving rent prices higher, and driving, a gentrification of this area. In fact, we still have moderately lower relative income in this area of right around $41,000. Income growth has only been 18% over the last 8, 9 years. And so what's likely happening is that instead of this being an area that's booming as far as investment and gentrification, this is likely an area that has simply become the safe haven of affordability for homes. And so we're seeing a lot of folks who are in that 35 to 40 to $50,000 median household income shifting here to be able to buy homes in that $150,000 to $200,000 range. So not necessarily the spot where I'm going to assume that we're going to see a lot of dollars being invested. And one of the ways I'm going to, oh, yeah, go ahead.
What is the percentage that you try to look for? Did you say over the past 10 years, did you say 20% is what you usually
Yeah,
like?
over the last 10 years, I want to see at least 20%. I usually, in my short form, I like to use 15% over 5 years for the last couple of years, uh, especially because of how quickly inflation has eroded buying power. We need income to be going up over that 15 to 20% mark to be able to showcase that this area is actually seeing significant gains that is going to have a tangible impact on people's buying power.
Mhm.
Donato, can I ask you a question on this?
Absolutely.
So so we just saw that, the income is pretty much within that, like, 45,000 range. What do you think is
Mhm.
driving the price appreciation to be that high? Because I imagine with that income range, they wouldn't be able to afford what the appreciation has been pushed up for. So are you saying, like, do you think that investors are piling in for the wrong reasons potentially in this market and maybe that's pushing prices up? I'm trying to reconcile the income levels with the price appreciation.
Yeah, that's where I go to the rent to own ratio. So we have seen a massive jump from 52% of the houses in this area being owner occupied to over 71% owner occupied. A reminder, my rule of thumb for rent to own ratio is that 30 to 40% of the households in this zip code, if you're going to buy a rental there, should be renter occupied. That shows enough demand with enough supply, allowing us to get into an area without having too much negative downward pressure on our rent. The fact that we've seen such a massive spike in the number of owner occupants in this area tells me this is likely the area that we're just seeing people continuing to move into because it's most affordable for them to raise families and move into. So this is not necessarily the area that we're seeing investors pile into as far as buying a house and having it rented out.
So
I'm going
what
to
good ratio again? What is a good
I like
ratio?
30 to 40%. Renter occupied is my goal, 30 to 40%. And the next thing I'm looking at is my schools around here. Generally speaking, the better the schools, the more people are going to move to be able to be in a close location to those areas, raising kids, raising families. So there's some decent schools here, 3s, 4s, and 5s, not too shabby at all. Look, some charter schools nearby, some okay charter schools, not great. And then the next thing I'm going to look at is our franchises. So if this is a gentrifying area, I would expect to see a lot of these higher income facing franchises. So like Trader Joe's or a Whole Foods, which aren't here. Where are my Targets? Where are my Chick-fil-A's? There's one Chick-fil-A. Where's my Starbucks? Okay, great. Now, how about my Dollar Generals? Yeah, okay. How about my Walmarts? How about my, let's see here, Lululemons? No Lululemons. So the franchises like Trader Joe's, Whole Foods, Lululemon, Starbucks, and Target have increasingly catered to a higher income demographic. And they spend a lot of money putting their franchises in areas that are going to see increased foot traffic and increased consumer spending, or AKA areas that are gentrified. When we don't see those kinds of franchises in an area, it means they have not seen the return on investment yet when it comes to the type of clientele they're trying to get catered to living in this part of town. On the flip side of that, generally we see more Walmarts and Dollar Generals in more lower income parts of town. It's pretty crazy how you can see those things sometimes. So when we see a lack of the higher income facing franchises with an increase in some of the lower income facing franchises. This is another flag for me that this is not an area of insane gentrification, meaning property values aren't going up because it's an area that's seeing a lot of development and growth. It's more of an area of this is where people are moving to for affordability to capture that last bit of home ownership. And that's why you've seen the percentage of rentals drop down so fast. Now, in this area, if you were to choose to buy a property here, that's always an option. To set ourselves up for success most effectively, the vast majority of properties here are 4 bedrooms. So we should be looking for 4-bedroom properties. And we look at those types of properties. The majority of the properties in this area are single-family houses and 5 to 9 unit apartment buildings. So very, very little multifamily availability. So I would not recommend trying to buy a 2 to 4 unit building in this part of town. My rule of thumb is 10%. So 10% of, if you want to buy multifamily, it should be 10% of that market. So if we were to buy here, and the fact that appreciation is great, but the rent growth is great, but the population has been declining, the income is low, the lack of major franchises, okay schools, it's not an area that is the next hot thing. This is the area of affordability. So if we were going to look at properties in this area and say we're looking for off markets, well, we definitely don't want to buy anything that's going to be above the local median home price of 200 grand. You know, we want to be at least 4 bedrooms. For me, that means at least we're going to look at 2 bathrooms. And ideally, we're going to be looking for just properties in this zip code. And I'm looking for a motivated seller at this point. So we want to find something that's had at least, my opinion, 10 years owned with high equity and an absentee out-of-state owner, which means they're an investor. We do that, we got 34 off-market 4-bedroom, 2-bath, high equity, absentee owner, 10-year owned plus properties in this part of town that we can take a crack at. And so if that's what the process I'd be going through to see if I want to be investing here. My initial reaction after looking at this is that this is not necessarily the area that's going to be, you know, exponential growth over the next couple of years. The appreciation has been awesome, but it's largely due to the fact that we have, you know, lower income folks moving in and buying up property here to live in themselves, as opposed to a demand versus due to development, new businesses, new restaurants, and higher income folks moving in, which ultimately drives rent prices up. So this is right now I'd call this kind of like a sleeper area. Doesn't necessarily make me excited to pull a property here, but it could be something that makes sense based on your specific goals and strategy.
Mm-hmm. And what about
Does that help?
crime? Do you look at crime?
We can look at crime. Crime's always the fun one, right? So when we're looking at crime, right? When we're looking at these types of data, when we're looking at this type of data, first thing I always say, and I know Sarah's heard me say this all the time, right? Is there's crime everywhere. There's always crime no matter where you're at. Now, even in Mark's beautiful Hawaii, there's always crime somewhere. Just a fact. What we care about is what kind of crime, how much is there? So when you see all this orange and red, orange means physical violence. That is assault. Everything in red is someone with a firearm. AKA, it's a little more serious. Okay. Things in blue can be anything from trespassing. That was this was December. This was this month. This was this week. Okay, so that just happened. It could be trespassing. It could be pickpocketing. It could be motor vehicle theft. And everything you see in yellow are things like destruction, damage of property. And as I mentioned in our last office hours, we are releasing a guide to this. So all the pins will be over here and you can take a look at them. So when I look at this, right, what I'm looking for is where are the hot spots? And clearly, like right down here by State Park Meadows, there have been over 5 different reported vandalism and destruction of properties in the last 5 weeks, all right here. I am seeing a lot of simple assaults all in the last couple weeks, aggravated assaults. All of that, because of how recent this crime is, makes me less interested in buying there. Instead, areas like Lakewood Hills, lower crime. Areas like this neighborhood between Egypt Central Road and Coleman Road, lower crime. Areas over here to the west, past New Allen Road, less crime. And we can take a look at which areas are getting tagged, like here, 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 and down here. So if we're to buy a property in this area, any of these spots that we're seeing less crime and less serious crime is where we should be spending more interest when it comes to having lower risk for the properties we're buying. Does that help clear that up for you?
Yeah, yeah.
Perfect.
Thank you.
You got it. Absolutely. That also reminds me, we haven't announced this yet. I keep doing new stuff to this product. We are coming out with rent to price ratio. So basically, on any zip code across the nation, you'll be able to click a button and it'll tell you what the rent to price ratio is. So basically, that 1% rule, and it will rank the zip codes in that city based off which ones have the best rent to price ratio. I hadn't announced that yet last time, but that's just something that you guys have written in about, and so we are releasing that. And yeah, all right. Kind of another question. Vanessa, I don't think I've heard from you yet, so we're going to give you a chance to ask a question. No, Vanessa, don't leave me out to hang. Oh, I went out on a limb. Oh, it's okay. We tried hard. Vanessa, next time we'll talk. Any other questions that I can help answer at this time, whether about new things that are coming out? For those who weren't here on Wednesday, you guys know that we announced some new features that are rolling out, I think this weekend or Monday, including the linked properties to be able to see what other properties are owned by the same owner. You can now pull up to 500 properties. You can now search cities by how much multifamily there are. You can now filter your rent comps. Sarah, that's actually done now. It's on our test server. I'll have to demo that for you later. And you can now draw a boundary for your properties. Plus, we've updated the data through November. And we have another 1, 2, 3, 4, 5, 6, 7, 8, 9 upgrades coming next week. So if there are any questions about that, please let me know.
Where's the draw button?
Oh, so that will be coming out in a couple and with our next release in about I think a day or two. But it's gonna be like right here, underneath this little orange man. There'll be a circle icon, or
Mhm.
they'll draw a pencil icon. You'll be able to draw that. You're gonna get an email about that as soon as that's out. So make sure every time we release an email that says BrightInvestor new version, every single new thing that's included is in that email. So make sure you're looking for those. In January, we will also be doing a kind of reintroduction of everything new we've been doing over the last 6 weeks. So if you've been in and out or not catching all of our emails, we will be doing a webinar that goes through all of the new stuff that's come out or about to come out to get people all on the same page of what functionality is available for you. Yeah, Chris, super cool. Oh, Vanessa, you did put a question in the chat. I'm sorry. Didn't mean to flame you like that. Okay, let me go ahead and answer this. Hello, Donato. Just want to here to learn and curious about your tool development. I'm currently a little sick and sounds great, so keeping audio and video off. No problem at all. Curious if your tool has an ability to narrow down to see duplex and triplex properties. Another question, what are your thoughts on investing in new construction? Any markets you know that may be fairly decent if I'm interested in new construction? Okay, so let's do both of those. So first off, yes, we can find duplexes and triplexes. Now, at the same time, my recommendation is we should be shopping or we should be fishing where the lake is stocked. Meaning, if we're looking for duplexes and threeplexes and fourplexes, then we should be looking for zip codes in areas where at least 10% of the market is 2, 3, and 4 unit buildings. Otherwise, you get situations where folks will say, Donato, I want a fourplex in Orlando in this one zip code. And we look and there's literally 5 in the entire zip code. That's a lot of competition. Conversely, and I always use this example, it's why I love investing in St. Louis. Sarah knows this. My zip code in St. Louis, Missouri, if I click asset type and go to zip code, and I click generate map, over almost 50% of the market in this one zip code is 2, 3, and 4 unit buildings. So when I see that, there's a whole lot more inventory for you to get after, Vanessa. So one of the upgrades we're making is now with this asset type, if you go to a city and you say, I want to look in Ohio, when you click 4 families, it will show you what part of town has the most fuller family, so you spend less time searching for it. That's one of the upgrades coming out. But for example, let's say you have that area, right? And you're ready to go, and we click search deals. All we have to do is in our search deals section, go from single family to multifamily. And once I do that, and I click multifamily, and I say I want to look in just this zip code, and then I click search properties, I have over 2,500 duplexes, triplexes, and quadplexes that I can start running numbers on. And in fact, in the last office hours we did, I mentioned how I'm offering on 7 of these right now, in final negotiation on about 2 of them for seller finance opportunities in this area. So that's how you would do it for the triplexes, duplexes, and quadplexes. As far as the new construction piece, markets that are having a lot of new construction, at one point we had some build permit data on here. It wasn't working the way we wanted to, and it wasn't as widely used, so we're changing it out. I will tease something. I literally had this conversation yesterday, so this would be great feedback for me to see if you guys want this or not. But I have a partner that's approached us where any property that you have in the country, if you look it up on BrightInvestor, this company will do a personal one-on-one consultation with you for free and give you the name and contact information of every major contractor that works with investors in that city for that specific property. Meaning that they will give you the electrician, the plumber, the roofer, the drywall guy, the GC, any contractor you would need, and they will instantly help you bid that property out for any renovation you want to do for free. Is that something you guys would like? Otherwise, I won't build it. You guys can put it in the chat or you can unmute. It's up to you.
I mean,
Give me your
Donato,
call.
I'm looking at Burring, so I mean that would definitely
Yeah,
be useful, but I'm not, I'm still developing my first,
yeah.
like getting into my first, so I probably wouldn't use that for a bit longer, but,
Mhm.
but definitely eventually I think it would help.
Okay. Okay. That could be so it would be something where similar to when you guys are looking at properties in BrightInvestor. And I'm just gonna pull one up here. I need to find an example. Like, oh, I don't know. Let's say this one. Let's say you're finding a property. Essentially, there would be a section here that says local contractors, and you would fill out a couple quick questions about the kind of work you want to do and this level of rehab you're doing. And then it would send you to that team. They would ask you some questions about the work, and then they would get connected to those contractors. So this is another simple thing that we can do to help you guys, whether you're living in like Sarah, who's living in the New York and wants to do a rehab project in Missouri, a little easy thing that we can do to get you connected to a local contractor that is specializing in certain types of projects. So that's what we're toying with. Okay, perfect. So I'll call them back and say that we're interested, which is nice. Okay.
Question.
Oh,
I know on like
yes.
a previous call, we had talked about the ability to search property types and find like specific states and specific cities that have like more multifamily than others, like across the
Mhm,
US. Is that
mhm.
something that's being implemented or is that a ways away?
That is something that's also being implemented. So it's starting off with the asset type. So being able to type in a city and see how much multifamily is there. That's going to be done with this next push, I think, this weekend. That's gonna be ready.
Will that just be like a new feature on the like market search, like the market comparison area, or is
It
it?
will actually be here in the asset type section. So when I click St. Louis and I click asset type, you can simply say what type of property you're looking for. And you can say, I want multifamily, 2 to 4 units. And then it will highlight which zip codes in the city have the most multifamily.
So
And now,
I'd still have to be in the city that I'm searching in. Because I was
that's
thinking
correct. Yes.
more like if I wanted to pinpoint a market, like not
Mhm.
what I'm looking in, but like a market in the US
New one.
that had a lot, yeah. So I'm thinking of
Yeah.
it more from like a market analysis to pinpoint like a new market.
So that will be the next iteration of it. So being able to take that and put that into the market finder as find markets with X. That will be the
Mhm.
next version of that. All right. Any other questions that I can help with? Put it in the chat here. I see I've Lauren, have we heard from you yet today? Good to see you again.
Hey, how are you?
I am good.
Good. I've been using your software a lot and I love it.
Thank you.
Wanted to see how I just looked at a triplex in Sheboygan, Michigan.
Sheboygan. Let's do it. Okay.
Zip
You want-
code, zip code.
yeah, do you want to do we can do the address and the
Okay.
property. We can do both.
Awesome. It's 463
463
West State Street,
West State Street.
Sheboygan, Michigan.
Okay, that
Oh,
the C.
there you go. Yeah.
Okay. 463. Okay, cool. All right, let's break it down.
Okay.
And I'm gonna do my
It's a lot of work.
I'm gonna add myself a little sticky note and say this is Lauren's deal. Line me.
Cool.
Okay.
You wanna watch?
So let's go ahead and check out some appreciation for this part of town. What are home prices on average going for? This is interesting spot right on the water here. Okay.
Yeah.
Let's see what we can do. Ooh, okay. So first off, great appreciation. 12% per year is pretty fantastic.
Mhm.
Definitely some volatility. So when I'm looking here pre-COVID, you can see we're peaking, and almost every year we're falling back down to our low. So we start at 147, peak at 200, fall back down to 154. So some pretty significant volatility every winter.
Yes.
Is this a seasonal market? Very
It is.
touristy, very okay.
Yeah.
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 This
Yeah.
this
Okay.
is very common with tourist destinations
Okay.
because the influx of transaction activity happens in the warmer months. So every winter it's very common to see that level of volatility.
Hmm.
Only issue with that is, for example, I've had investors who are in California and they have short-term rentals, and they are deciding whether or not to sell those properties and roll it into a long-term rental like in the Midwest or keep the short-term rental. Only issue with things like this, when you have high appreciation, but there's a lot of volatility, is that there's no guarantee that equity is going to be there when you need to sell it.
Huh.
So if you really needed to sell your property in July 23, awesome. If you needed to sell your property in December, not so awesome, right? And so if you're using the property for an appreciation play, or you're using it for this is kind of like my piggy bank of equity that I can refinance or HELOC from to go do other projects, I generally don't recommend buying those properties in these highly volatile these types of markets. But
Interesting.
if you're going to be holding for a long period of time and you're not planning to tap it consistently for equity, and your primary goal is cash flow, it can make more sense. But that's one of the first things I want to point out about a market like this.
Okay. That's very helpful.
I aim to please. When it also, I know we're speaking of BrightInvestor, thank you for the compliment for it. I have to give shout outs to my co-founder Drew, who is highly responsible for a lot of what we do today. And he just had his baby girl 2 days ago in the hospital. They just came home yesterday, so he is recuperating and resting at home right now.
Congrats.
I know it would mean the world to him if he got an email from some of our community
Yeah.
of BrightInvestors. We're giving him hey, welcome. The baby's name is Rhoda because he's old timey like that. I'll spell it out here in the chat, but if I'll put his email here, if anyone is interested, I know it would totally make his day. I just had his new baby girl. So okay, going back to here.
Okay.
Next thing we'll look at is population. So also, when we have a very coastal kind of touristy market like this, population can be very volatile. Okay, so we're actually positive. That's good. We're just in the green, which is good. So we're slowly going up, but our year-round population is very low. 14,000 people year round is a pretty low population to be able to pull from.
Okay.
So it's a little concerning. What's our major metro around here? You're
There's
on the border. You're okay. Yeah, there is none. You're just on the border there. Okay, gotcha.
Yeah.
Okay,
We're
so
in the
if
middle.
we're gonna, go ahead.
Sorry, we're like really in the middle. Detroit's 5 hours away.
Oh wow. Okay.
Big touristy place.
Okay. So next thing you want to check out is our income. Now, this is normally where these areas get weird because it can be either super low or super high, depending on who the year-round population is.
Mhm.
Interesting. Okay, so this is exactly what I want to see. My rule of thumb, right? 15-20%. The fact this is up 34% over almost an 8-year period, it's great. So we're seeing more and more high income people moving here and living here year round, which is awesome. So we're definitely seeing the kind of trends that we want to see here from a population standpoint in terms of what they can afford.
Okay.
And the next thing I want to look at here is the type of assets, because you said you have a triplex here.
Yeah.
I'm gonna take a bet that that's not very common. No, it's not. There are 2.3% of the market is a triplex. So if you're buying this, you are literally buying a needle in a haystack. So that is, whereas 84% of the local housing market is all single family houses, you are going to have one of the very, very rare owners of a 3 to 4 unit building in this area. So the fact you have a very rare type of property likely is going to increase its value long term because there's not very many of them going around. It also means that with such limited inventory, you might have to really target that right buyer who wants one of the 33 plexes that are in this very specific part of town. So again, this makes me feel like a very long-term approach to this property is going to be warranted. Do not buy here with the expectation that you're going to be able to cash out very quickly because of how rare this property is for this area and for how variable we're seeing the appreciation is. Does that make sense?
Yeah, and I have no intentions of it would be a buy and hold.
Perfect. Okay,
A
that's
renovate,
great.
buy and hold. Yeah.
Awesome. Okay. And we plan to long-term rent this, mid-term rent it, short-term rent it? What's the play here?
You know, that's up in the air because there's a hospital 1 mile away, with a lot of
Oh,
staff. Um,
oh yeah, right down there. Okay.
yeah.
Here's your
So,
medical.
yep. And then again, there's an Airbnb market in the summer. Um,
Okay. Oh, the
so
property's like right on the main street. You're like right there. All
it's
the
really,
restaurants are right there.
yes, it's
Wow,
walking distance
that's
to the
great.
bistros. It's a really cute, old-timey Michigan town theater.
Oh, and the coffee shops are right there. Yeah, see, this is why I love the street by street stuff. This property is right next to all the restaurants, right next to the coffee shops. You're literally a block away. That's
Yeah, and
awesome.
then just take that street across the bridge to the beach and yeah.
Okay. Yeah, that's really nice. I like that. Okay. What do the schools look like here? Okay, they're down to the south. Okay, so the schools. So yeah, you're definitely a bit more downtown, a bit more urban. Airbnb could definitely be an avenue here. So let's go ahead and let's run our numbers on this. Ba-da-bum. So pop this bad boy open. Is this an on market or off market?
It's on market.
Perfect. Okay, so they're 134, 34120. Okay. So I'm going to type that in. That's also why we did this too. For some markets where the MLSs don't like to share data, that's why we made the ability to edit it. 34120.
It actually has
And
3
they're
bathrooms. I don't know why it's saying 4 bathrooms. I went and looked at it today and I
oh,
couldn't find that 4th bathroom.
great. As also exactly why we did this
Yeah.
because agents get it wrong, and so it's
Yeah.
nice to put it in there. Yeah. Okay. Let me put. That should work. That should be working here. Okay. So, and we're gonna take a look see here, and I'm gonna pop open a couple of photos of this bad
Oh, it
boy.
needs, yeah.
Oh wow.
It needs all
Ooh.
the window.
Woo!
Yeah,
Yeah. That is a blast from the past right there.
it sure is.
Okay, so this needs everything.
Yeah,
So they're all 1 bedroom, 1 bath apartments. You're telling
right.
me.
Yep.
Okay. Okay. Let me see what I can find here for my rents. Let's see what is a 1-1 rent for. Okay, let me try my backup provider. Interesting. Let me see what I can do here. Give you some more data so we get into more unique parts to town like this. So if we were to run the numbers on this and they want 134 for it, our AVM estimated 136, and we got an interest loan at today's interest rate. And what would you need to be at, basically, is what I'm looking for to make
Um,
this work?
I would rent each unit for no less than $1,000 a month.
Okay. Well, Rehab wise, I mean, we're probably looking at pretty significant rehab. I mean, you could be spending 25K a unit, maybe 30K a unit
Yeah,
on full rehab. So
I
that's where
was
we're looking at 75 to
5.
$90,000.
Yeah, yeah,
Okay.
yeah.
So looking at this purchase price of 134, 40%. We're trying our water sewer trash for $200 a month. You have a pump to manage it.
I didn't do it
775.
underwrite on your I've never underwritten a property on your platform before, so this is really awesome.
Oh yeah. Actually, Sarah, one of our stars, is actually she's been testing new Burr calculator um
Oh, cool.
for Burr calculator and for us that's coming online here shortly. And she's been pointing out some of the kinks that need to be worked out on it. But
This
yeah,
is
this is
awesome.
yeah.
This-
So
Okay.
what I'm seeing here, right? That makes sense to me, right? You could have this property, two units can be occupied, one unit can be vacant, and you're making money with a full 10% management fee, with 7% for repairs, 7% for vacancy, and 5% for capex.
Wow.
So 11% cash on cash with a 10 cap, that's a damn good deal.
Let me take a picture of this.
I
I'm
can just send it to you.
Oh, you can? I'm meeting with my banker on Tuesday, so she loves
Yeah,
when I send her all this information. Okay, so you
I
think
can do that.
so if I put
That makes sense to me from a purely financial return standpoint. And crowd chime in here. These are good numbers, right? Anything over 7 to 8% cash on cash, and anything over like a 7 to 8, 9 cap is really attractive to me. So
okay,
from a cash on cash perspective return, it makes a ton of sense. Now we can also check this as a midterm rental.
yep,
So if we were to now, we're still going to have to do the rehab on it. So we're going to do. I want to bump this up to about 105,000 for the furnishing of it too.
mhm,
And for each of those, if instead of $1,000 a month, say we got 1,500, which we can always check on a furnish finder. And then we have our interest rate.
mhm,
Then we have our management fee.
mhm.
And this time you are paying for electric and gas because it's a midterm rent. Actually, no. Yeah, actually, you would be for
Yeah,
midterm rental. About $400. Da, 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 da. We're going to say Wi-Fi, maybe say paying $150 a month for their Wi-Fi for all 3 units. Da, da, da. Monthly restocking, I normally do about 150 as well. Da, da, da. All things considered, you actually make a little more cash flow on the long-term rental side than a midterm rental, all things
Oh,
considered.
interesting. I was actually wondering that. I
Well,
was actually
now
wondering that.
you don't have to wonder anymore. It's
Yeah,
all,
because
all
one
done.
apartments are now going, actually, I've heard, for 1,200 a month in that area. But the millennials are so desperate. For
I'm gonna get that tattooed to my forehead, right?
yeah,
Millennials are desperate. That's perfect.
not talking about
Love
you.
that. Love
All
that. No,
right. So,
you're fine.
okay, so this is
Um,
a good deal then.
I think it does. I mean, that level of rehab, granted, it's a lot of cash out front. So would you be using a hard money loan? Would you be using
No,
partial proceeds? No.
actually, I could do two things. I could get a HELOC out of one of my houses at
Great.
uh 8.25 last I checked, but I could also have
Okay.
LLC. I could get a small business loan at
Hmm.
7.25. However, my banker said she could decrease that to the high 6% range if there's major work
Oh,
that needs to be done. So,
yeah. I mean, that this makes sense. And here's the thing: I say this, take it with a grain of salt. The fact you're doing such a major repair on this property means that you're likely going to have less repairs and capex you have to budget for. So we're projecting a net cash flow of $1,500 a month. But if we set our repairs, vacancy, and capex to zero, because you're not really spending that money every month, you're just putting it aside in a different bank account, you're actually grossing around $2,200 a month in cash flow.
that's incredible.
So that turns us into a 22% cash on cash return and almost a 20 cap.
That's insane.
I would do that deal.
Okay.
I might
It's
I would
just
do that deal.
fun.
I might just
Combination.
factor in like a little bit higher on the insurance, maybe.
Absolutely.
Yeah,
Yeah, that's a great point.
Wait, what did you
that's funded.
Okay, and annual taxes are probably, this is a very property tax friendly location compared to where I live in Michigan. Um,
Great. So we actually pulled last year's property taxes for this. So this is what they paid last year.
That's nothing. I'm from California, so that's free.
Huh.
as far as I'm
Yeah.
concerned.
Great call, Sarah, for boosting the insurance. Do we have my insurance estimate right here from it? So landlord insurance policy is estimated at $58 a month.
Yeah,
But what
I found those to be a little low though. Like I don't know.
okay.
Like I actually called up steadily and I didn't do it like you know, on like a bunch of properties, but I think I did it for one in Texas and it ended up being like
A little higher.
a good chunk higher than like what was in there. Yeah. So I usually gross that up when I'm looking at stuff for an
I'll call
estimate.
steadily then, see if we can boost up make sure
Mm.
it's giving us the right connection. But thank you for that. So if we
Um,
say we boost up our insurance up to 3K,
I
still a
think
good deal.
1,000 is a little bit high, only because I've been getting quotes from my insurance agent for properties in the area, and they're usually about 1,700 a year. But it's
Okay,
always better to go higher than lower, and I
sure.
would probably um do the worry-free waiver on top of it, and if I
Okay.
did term rentals. But I also may do each unit differently, do a long-term for one, an Airbnb for another, and a midterm or midterm slash Airbnb for two of them, and long-term for one. I don't know. That's the thing, is you can play around
Yeah,
with.
you have the option. I think that there's definitely margin here for those kind of rents. There's definitely margin to be able to experiment with a couple different types of strategies here.
Okay.
So what I can do is I can take this. One of the other upgrades that's coming out is your ability to edit all three of these sections, so you can customize the report more effectively. But what I will do is I will
Can
take
I
this. When you click,
can I tell you that I love your calculator so much more than Brandon Turner's?
oh, thank you.
Oh
I'm
my
gonna
God,
text him that.
I
I'm gonna
love it.
text him.
Yeah, tell him that Aaron from his group. I like the layout better, and you add Wi-Fi in yours. If you are able to email me that would be incredible. So I can show
Just
my.
did.
Oh,
It's
you
in the
did?
chat right now. I just sent you this report.
Oh, so then I can just
You can copy that link and send it to whoever you want, or you can click generate PDF and download a PDF of this.
you guys are amazing. I don't know how you do this.
It's honestly through people like yourself and people like Sarah and Mark and everyone that's told us, hey, here's what you need to do to make it better. And then you do that for 3 years straight, and then you get here. So it's been fun.
I'm really impressed.
I have a
Thank
question.
you. Yeah.
Where is the property tax information pulling from? Is it from the county or is it from Zillow? Where are you getting the
Look, local public assessors in county. Correct. So when the property taxes get registered on an annual basis, that gets pulled into our system and injected in there. So when we go to the calculator, it automatically pulls the last year's property taxes and puts them in the calculator.
Okay, so it's the prior year number, prior year property tax.
Correct. Yeah, it's the last official number that we have as far as paid property taxes.
Mm-hmm. Now, I don't know if you have time. I've been trying to figure out how you use the layer when you add
Ah,
layer on top. I couldn't figure it out.
no problem. I will assist here. I'm going to take a note. Actually, I'm going to call our insurance provider here. Call steadily. Update boxes. Alrighty. Okay, so I'm gonna go back to Memphis. That's where you were hanging out. All right. So let's say that we are in that Egypt area, which is you're looking at it, and let's say, you did your, oh, I don't know, you did schools. You said, okay, great, I've got my schools. All we have to do here is click add as layer. So once we do that, this little button shows up. So I can clear my map and I can do whatever I want. And this is my little layer box. So I can come over here and click this eye icon and turn it on. And now I have my schools here. So let's say I want to layer that with something else. And let's say I want to layer that with my crime. Great. So I will do my crime map and I'll let that load up for a second. And when that's done, and it shows me all my different pins, I will simply add that as a layer and click add as layer. And then I can clear my map. So now my map is completely clear. And in my layer box, I've got 2 layers. I've got my schools and I got my crime. So now I can go ahead and just take all this data and say, okay, great. Hey, these 2 schools are actually in a little bit lower crime area. This one's right next to this, right? This school over here, the better ranked school, the 5 out of 10s over in this area. Here's what the crime looks like around it. And so all of my layers are just getting saved up here, and I can turn them off whenever I want. And so let's say I want to do another layer, right? And this time I want to do an appreciation. So I'm gonna say, okay, great. Here's my zip code, and I'm going to do my appreciation check. No problem. Let that load for a second. And I can add that as a layer if I want. And click add as layer. Clear my map. And now I've got that layer right here too. And so for anything that can be layered, we just click add as layer, and then it goes and it gets put up here in this little layer box for us to be able to toggle on and off. I find it's most effective. I'll say this, I use it the most when I'm layering businesses, schools, crime, and franchise data. So I want to know where are the businesses next to where are the low crime areas next to where are the schools. And I use it in that kind of 1, 2, 3 combination to figure out what part is making the most sense for me.
Is
So
there
I want to say, oh, go ahead.
I was just gonna say, is there a way to pin it? Because I find that I lose it a lot when I'm refreshing or when I like log off, log on. Like, is there a way to just keep it there?
Ah, yes, this has been a project in the work for a while to allow you to basically, whenever you create a layer set, to save it permanently forever. So the goal with that is to be able to do, Tim, you or no, this is Tim Royster. Sorry, that's the first name I saw there. Sorry. So, but when you're making your layers, like Sarah's, like when you're making your layers, it's a lot of data because we're talking tens of thousands of layers that our BrightInvestors are using every single month. So what we're working on is a way to, let's say you're doing these layers, we're adding basically a save button. And when you click it, you can say save layers. And it will save those permanently to your account. So the next time you log in and you're in Memphis and you're in Egypt, Tennessee, they'll still be there and you can just toggle them on and off. We are on the back end basically working on how we organize that so it's fast and efficient for you. But the answer is absolutely yes. That is something that's been on my list for a while, trying to figure out the best way to do it. So absolutely, that is where we're going. And 2, 1, 3 questions. Does that help answer your question on the layer side?
Yes, so just one last question. You were clearing out something, right? At the bottom right corner.
Yep, my little,
Or
yep, this is my clear map. So whenever we do a search and we want to clear a map, we can just click this little red icon and it clears the map and resets it.
so do I have to do that each time when I add a new layer? I have to clear it?
You don't have to, because also let's say you did a school search like this. If you went back up to click a new type of data, like up here, it will also automatically clear the map. So you don't have to do it each time if you don't want to. It'll automatically do that for you.
Okay.
It's just your preference. We find some people like being able to click a big red button, so we put it in there. All right. Any other questions I can help answer? I've got my notes for today on study for insurance. Update boxes, making sure the updates stick around. I'll talk again with the team to get our progress on the saved layers. And look at and okay. And you guys will all be getting an email in the next, I believe, couple days with the updating you with the newest version with what's coming out. And the goal is to have another 2 new versions with another 15 or so or 20 upgrades by the end of the year. That's what we're shooting for. In addition to a couple new calculators. So that is what you guys should be looking out for from an email perspective. If you have any questions, please let me know. And I will be available again next week on Wednesday for our next office hours. As a reminder, that is at 6 p.m. Pacific, 8 p.m. Central. Sydney, very helpful. Thanks. Absolute pleasure, guys. I love being here.
Can I ask
And
one more question again? How did you get to the deal analyzer page?
yes, so all you have to do
Yeah.
is either A, if you're searching for deals, you can look that up,
Uh-huh.
or B, if you have an address, just type in the address here.
Okay.
So let's say that I'm just gonna do an example here. I'm looking for on market, so listed on Zillow, basically single
Yep.
family properties.
Okay.
So
Got it.
here's all my properties. I click this one. And once we click on it, we have our sales comps. We
Oh,
have the rent comps, the insurance estimate, and then this last tab is the deal analyzer.
got it. Oh
You
my God,
got it.
this is incredible. I'm going to send Drew an email right now.
Oh, thank you. He's gonna love that.
And you got
He's
on
gonna love that.
Brandon that he's got nothing on you. His calculation.
So just yesterday, I was talking with Caleb, who's Brandon's Better Life Tribe community manager, and we're integrating with their system a lot. And so I'm gonna shoot him a text saying, "Hey, just so you know,
Yeah, Lauren
over here."
because I love how you have all the deal types on the left, so you can quickly, and then you can be like, no,
Yeah.
let's see how it is if I midterm it, and yeah, I
I
mean,
appreciate that. I'm just getting
really,
gassed up today. Thank you. It's been fun time. And thank people like I keep saying Sarah's name because she's been great helping us make it better improvements here. But no, Sarah is someone who's actually testing out calculators and helping us do those types of things. So big shout out there and helping make sure that we catch everything so it's good. And then also big thank you to everyone that's here today for allowing me the chance to explain more about what we're doing, pour into this group, and get your guys' feedback on what you need to make it better. So it literally, I'll say it 1,000 times, BrightInvestor would not be here without everyone like yourself being here to help it make something that you guys all want to use. So thank you so much. We're very, very excited, and I'm proud to be able to be here and help make everything easier in your guys' real estate investing journeys.
thank you.
Absolutely.
And you're
Dennis, I see you have a question as well. Dennis, my main man, Dennis the Menace, my friend, my colleague, my brother, Dennis. That's okay. I understand. We all get shy sometimes. You know what? No judgment. Okay. Well, guys, I will go ahead and get this recording sent out. In the next 24 hours, this recording will be sent out to everybody in the BrightInvestor community. And for those of you who, I'll do one last thing. If you guys aren't aware of this yet, these reports that Lauren, you can send to people, these are customizable, meaning you can put your own branding on it. So, for example, in all of your profile sections, you can come down here in your report customization and change the colors on your reports. So if if you like hot pink and I don't know, yellow, maybe like Easter a lot, I don't know, whatever you like. And you have a different color or logo. Say I am Lauren, the company, or I am at laureninvestments.com. And I save that. When I come back and I generate property reports, my reports will now reflect your branding. So if you have a company or a brand you're trying to establish, oh, this is my hometown. Look at that. Okay, this is where I'm from. So let's go ahead and take a look-see here. So do a really quick example of this. It should work, I believe. I think it's saved. Let it view report. Let it load up for a second as it renders. Now, when I click view report, I pop it up. Now it's hot pink and it's yellow. And down here at the bottom, it says Lauren, and you can put your photo in here. Like, so this is for everyone here. This is completely brandable to you to help build your authority. So just making sure you guys know about that.
Thank you.
Absolutely.
Awesome.
Dennis, my man, I see you now. How you doing, brother?
Hey, how are you today? Thank you so much for doing this. I've been trying to get on these, but just been extremely busy. So I'm a realtor in South Jersey market. That is basically suburbs of Philadelphia, one of the larger markets in the United States. And I'm actually doing this new campaign where I'm going to properties that are essentially more distressed, I would say. And
Sure.
my goal is to basically find more people that are going to be interested in those properties. So I want to start using the reporting that you were just showing for that, because the way I look at it is I go to a property, I do like a reel, and then I say, hey, if you want to know how to make money with this property, please DM me money and I'm going to send you that. So is that what this is?
Yes. Yes. Thank you for asking that. God, I love this group so much. This is great. Okay. So when you have these reports, because you can brand them, because you can do all of this, this link right here for this property, if you put this on the internet, literally anyone in the world can click this link and see this on their screen. They do not have to log in. They do not have to make an account. They do not have to do anything besides click this link to see it. And when they have this link and they pull it up on their computer or their phone, they can change the calculators. So Dennis, if you send this to me and you've put your numbers in, I can go in and I can change the numbers to what I feel comfortable with, and it won't change the numbers on your original copy. So everybody has the option to rerun their own calculations using this. Then, if you want, you can click generate PDF, and instead of making it a live web version that's interactive, you can simply download a PDF copy of this and send that out to people, like this right here. And you can use this instead.
Yeah, we're gonna
Now,
use something like ManyChat to like basically when somebody says DM money or DM, cash or DM deal, is gonna then do a ManyChat. My question for you is
perfect.
also if I give them the interactive one,
Yep.
I feel like there's definitely good data there, but when I do comps comparable to like my MLS and what's there, there's sometimes some data missing. Is it just because it's certain markets, or um, how does it like essentially benefit somebody, say, is a W-2 worker and he's like, well, I want to do a flip, right? And really for me is to entice them because I can provide them hard money, I can provide them gap funding, I can help them with all of that.
Right.
I have a partner that actually is in that space, but I really want to just have like the whole package when they pull it up. It's them to say, okay, well, if I invest 50,000 of my money, I'm going to be able to get this property, and essentially, this is where the return is going to be. How do I make this
Right.
like more easier for people for someone like I see this and I'm like, okay, people who are investors, that's no brainer. But how do you make this more simpler, or can this be more simpler for people that are just W-2 workers? They're following me and they're like, you know what? It's time for me to buy my first rental. It's time for me to do my first and flip. I have my 401k and I'm putting it into self-direct IRA, or I'm able to pull out money out of it.
Mm-hmm. Okay, so what I would do here is, especially if you're trying to get people to buy fix and flip, so I might come in here and say, okay, let's say I have a $200,000 ARV, or let's say we're trying to get someone to buy a flip in this case.
Or sometimes they do what's called construction to hold, right? So they buy something like a burr, basically, essentially what we call the burr.
Yeah. So a little bit earlier, I mentioned that Sarah's actually testing a bird calculator. She's been using it for the last week, and she got me some feedback. So we're implementing an actual bird calculator on here, so they can just click bird button. To make it even simpler, I think there's options. But what I would love to do is maybe have a one-on-one with you, and you can run me down with the kind of questions you're getting from the folks that
Okay.
you're working with. And I know we talked before, we had a one-on-one, but for this particular case, I'd love to say, hey, what specifically are they asking? Because if there's something on here that we can do to make, and that goes for everyone here, whether it's a lender, an end buyer, or a seller that you're trying to get in front of, if it's something I can do to make that easier for them to understand it, I'd like to hear it.
Okay.
So I'll put my email in the chat. It's donato@brightinvestor.com. And we can set something up and we can see what makes the most sense for you. Because remember, you get with BrightInvestor, you get as many reports as you want. There's no limit. You can make as many as you want forever, and they get saved to your account.
No, I have that, and I was thinking about from my perspective. I would, people are doing a lot of these reels, and like stories don't really work as much as they used to. Now it's really reels, and I see everybody's like comment something or DM me, and that's really what's getting you to kind of keep
Yep.
growing to people even in their circle. That's really what I want to have
Yep.
is I want to have some kind of offering to where they're going to be like, oh my God, this guy went to this property. He just did a video tour. And I really believe that if I give him 40, 50,000, I'm going to be able to make, double that back in the next, 6 to 12 months or something like that.
Yep, exactly. Yeah, so that's where the fix
I'll
is.
email
Like
you. Thank you.
yeah, absolutely. The report garnered to, like, if they can click that link and they can pull it up and they can say, wow, I can actually see the numbers here. I think that'd make a ton of sense. So yeah, let's talk.
Yeah. Thank you.
You got it. All right, guys, I will get this recording sent out. You guys can get an email for the next version the next couple of days. Make sure you're watching for some of the upgrades that are coming in the next few weeks. Everything that we talked about, that's being upgraded to the system. And we are on our way. So thanks, guys, for being here. I appreciate it. And I'll see you on Wednesday.
All right,
See
thanks,
you
man.
guys. You got it, brother. All right, bye.